ARK, the pioneering investment firm that has trounced the market by buying innovative, fast-growing companies, announced that they are buying stock in Skillz, SKLZ stock, for the very first time in one of their actively managed ETFs. I actually covered Skillz stock last year, back when it was known as Flying Eagle Acquisition Corp, FEAC, and I bought shares back when it was around 12 bucks. Now that ARK is buying it, what should investors do? What am I doing? What am I thinking about doing? I'll talk about that here in this channel, this video right now. But first, a quick plug about this channel. My name is Daniel. If you've never watched before, you're watching Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. If you're interested in trying to find potential multi-baggers, stocks like Skillz that once traded at 10 bucks, now it's closer to 20, stocks that can go up hundreds or thousands of percent, make sure you subscribe. If you're already a subscriber, hit that thumbs up. And if you want to follow my personal journey to try to find potential multi-baggers, what stocks am I buying? Go to unrivaledinvesting.com, click on Journey. So let's dig in to this interesting development. So first, you got to understand why ARK buying is actually an interesting development. So ARK, as I mentioned earlier, it's this pioneering investment firm with several actively managed ETF strategies that are focused on top-down themes that should result in multi-decade favorable trends for the underlying companies. The challenge is that you can have a favorable trend but still have a company either whiff, or it's overvalued, or they just don't execute despite having a favorable, tailwind. So that's sort of the cross current here. But broadly speaking, this approach has worked very well for ARK in the last few years, focusing on these different strategies you can see here: ARK Innovation, Autonomous Technology and Robotics, Next Generation Internet ETF, Genomic Revolution, and FinTech Innovation ETF. They are buying Skillz in ARKW, which is the Next Generation Internet ETF, ARKW. Let's learn a little bit more. So why does this get a lot of people's interest? She's crushed it, as I said. We're in the last year up over 100% in her general innovation fund, as well as this, this next gen internet fund. And over the last, since inception, over the last 5 years and through inception, it's just fantastic returns. These are world-beating returns, 30% plus. I mean, that's better than what you see Buffett do over his multi-decade career of closer to 20% annualized. Now, admittedly, during his first decade, it was very high returns like this, but now that he's managing more capital under management, it's closer to 20%. So when investors see this, people start wanting to copycat. Oh, Cathie Wood from ARK, the founder of ARK, is buying this. Let's get in on this too. And the reality is, this is an interesting development that was never before available on Wall Street, where you could actively see what funds were buying things based on their active ETFs. This is, you can't, in the past, for example, several decades ago in late 1980s, when Warren Buffett started buying Coca-Cola, you only found out about it several months after his purchases were publicly filed. Here it is, every publicly traded day that these ETFs are around, you can see what they're buying and selling. That makes it really interesting to sort of, for smaller investors, retail investors, to say, oh, wow, here's this big ship moving in and they're starting to move into this. Maybe I should too. And that raises the question, should copycats keep copying? And this gets us to Skillz, which is what they just started buying today. So Skillz, I previously did a full, super detailed video about the business that this was based on their presentation shortly after they announced the SPAC merger, Flying Eagle Acquisition Corp, announcing that they're merging with Skillz. Subscribers, Journey subscribers, each month I try to call out at least one potential multi-bagger. In September 2020, I called this out as my potential multi-bagger, and I bought it for myself, around 12 bucks a share, as I already mentioned. So once again, if you want to learn about Skillz, the detailed one, click on the link below in this description, or I'll put it in the commentary as well, because this has a lot more detail than what I'm going to do right now. Right now, I'm just going to do a 10-second dive on what is Skillz. And this was based on the SPAC information, not the prospectus, which I have some additional thoughts on. So 10-second, dive on Skillz. It's enabling the rapid development of casual esports. Now, what's that mean? That means you can take a game, like a super simple, like Tetris-like game, and you can create tournaments and leagues and heads-up play, so that way people can casually play each other, or you can create sort of a betting element, like, hey, I want to bet you 60 cents that, like, I can beat you in this type of, it's not like you're playing a super complex game. It might be something like Tetris, like I mentioned, where it's very straightforward, and maybe it's a timed rush, or how many points do I get, and they help set up the tournaments, the leagues, the loyalty rewards. How do you set up the payments so that way if two players are willing to bet, like, oh, I think I can beat you, and one person beats the other, how do you make sure the funds are correctly transferred, and who's getting a cut and where's it going to? You can make sure you have anti-cheat and anti-fraud, because you don't want effectively a bunch of bots coming in and being like Super Tetris and crushing you, and all of a sudden winning all the tournaments, and then no one wants to play. So And then, the key element, and this is why it's the next gen internet, is like, look, you're tapping into these huge, enormous opportunity of esports, which is expected to grow very fast pace. And this is why it sort of fits into their macro theme ETFs, is like esports is expected to grow very fast into huge markets in the decades ahead. And they're saying, like, internationally, their total addressable market, this from Skillz, from their presentation, they're saying is $125 billion. New genres, $24 billion, getting onto Androids, $15 billion. So you can see, like, they're tapping into this huge, enormous market, lots of upside potential. So how does Skillz actually make money, given this aspect of letting two players play like this Tetris-like game and then make money or bet against each other? Where does Skillz, where does the game developer get a cut? How does this business model work? And so quickly, like, if you have two different players that are each betting 60 cents, one wins, one loses, that 60 cents goes into a pot. That's the gross merchandise value, or GMV, $1.20 to 60 cents players, and then $1.04 is set aside as the pot. Now, the game developer, they can decide how they want to allocate it. Do they want 50 cents? Do they want 60 cents? How much money do they want as prize money going back to the game, the player won that game? But only $1.04 is set aside in that prize pool of that $1.20. So that means 14% is set aside for Skillz. That's 14% take rate where Skillz is making money. So the other 86%, that's what the game developer can sort of set aside, saying, hey, we're gonna allocate these funds as such, and we get a cut, but Skillz gets their 14% cut. It's incredibly high cut, very, in terms of margin, they're saying 95% gross margin. They do have some operating expenses, but all in, they're expecting around 25% margins long term as this business sort of stabilizes. That's how they're thinking about it long term, what their goals are, sort of what they're penciling out. So you hear this, you see this business model, you see very attractive potential margins longer term. I wrote here, toll booths can be a very lucrative business, which they can be. Effectively, this is a toll booth. Like, every time someone wants to bet on the games that are supported by Skillz, they're getting a cut. So just ring the register, they don't have to do anything, and then the money just sort of starts flowing in. So what should you do? You see ARKs buying it, and what I would say is, there's no advice here. Like, there's no advice for what you should do, but I'll tell you what I'm doing. And I'm going to reassess to make sure I didn't miss anything, and then review the numbers. Like, I want to see everything. I want to reassess everything, review it. And that's what you should always do with Mr. Market in general. I just talked about that in my 2021 strategy as well, which is that you need to treat Mr. Market, whenever you see a stock quotation going up or down, that is an opportunity for you. That is not, you do not need to do what Mr. Market tells you or offers you. It is an opportunity for you to sort of capitalize on it. Do you like this price or don't you? You don't have to act on it. Mr. Market is not your guide. Mr. Market is there to serve you. And so when I see this, I want to review the numbers, and is Mr. Market serving me an attractive price, given that people know that ARK is now buying? So let's dive into their financials or their valuation in terms of thinking about what's the risk reward from here. So here is my valuation sheet. I've updated it since my very first Skillz sheet, the Skillz video, where you could download it. Now you can download this updated version of it. This range, of course, it could go a lot higher. It could go a lot lower from here. This is just a logical framework from which you can think about the business. There are some risks here that might justify it going potentially a lot lower, and there's some business execution aspects that could suggest, hey, if they deliver, it could go even higher. So let me walk through this analysis so you can see, oh, this is a potential range that I'm logically penciling out. That's part of my value proposition for you on this channel, is that I break out these sheets. You can play with them yourself. You have to go file, download it. You play around with the assumptions so you can see what you're potentially penciling out. So right now the stock's around 1820. It might pop a little bit for the news that ARK is buying. Maybe it goes to 20. The share count's closer to 390 versus what you'll see in Yahoo Finance. So the valuation is definitely closer to $7 billion plus. So based on their revenue of $120 million in 2019, you got $225 million. That's their guidance. That implies about nearly 90% growth year over year. So then what's the growth in 2021? And this is where you start getting a delta potential. The potential opportunity for investors is their guidance was for around like 365. I put a range of 50 to 60%, 50 being the base here, in the base and the low, but maybe 50, is too high. Maybe on the low side, I should put 40. And that's what I mean by this is where the rubber meets the road, folks, of if they execute in 2021, that is what's going to drive the stock price. If their growth rate is materially above 60%, I would expect the stock to do well. If their growth rate is 50%, I would expect the stock to flounder. And if the growth rate, let's say, is below 50%, then the stock I would seriously expect to flounder or fall dramatically. So that's how I start thinking about this sort of setup, and you'll see why as we play into the valuation here. Longer term, keep in mind, this is not their margins today. Today they're unprofitable, but they're making the growth investments so that way at scale they could have margins that are closer to 25%. So I put a range here of what their optimized margins are, 20 to 25% longer term. So that implies, a potential earnings multiple, so a optimized earnings multiple of like 100 to 140 times, which is pretty darn rich for a company that's only growing 50 to 60% this year. What's the growth rate, in the year ahead? I'm penciling, in the 5 years ahead. So this is annualized growth rate, somewhere between 30 and 50%. That's, once again, this is where the rubber meets the road. This is where the huge delta can exist, where if their growth rate, let's say, is closer to 50% or more, during these next few years, then the stock should probably crush it. Whereas if the growth rate's much lower, I would expect a sort of subpar return for investors. So based on these scenarios, so here's the 30, here's the 40% growth rate over the following five years, after 2021. What's the end valuation, 5 years out, 25 times? Because look, if you're able to grow at a 30% rate 5 years out, maybe that means in the fifth year, you're still growing 15%, 20%, in which case maybe you slap on a 25 times multiple. For Journey subscribers, I have a whole video just for how to think about valuation, how I think about, these multiples. So if you're interested in learning more behind my thoughts on how do I assign these multiples, that there's an exclusive Journey, Unraveled Investing Journey video on how do you value stocks, what sort of multiples and how do I think about it. And so you can see based on this range, 25 to 35 times. Look, if you're growing 50% for the next 5 years, there's a good chance 5 years out, you're still growing at, 20, 30%, in which case you could probably justify a really, full valuation like 35 times, in which case you would have 150% upside from this $18 stock price. That said, this is a range, down 30%, up 150. I think, this is a logical framework based on sort of the business continuing to execute. If there were a dramatic hit to their business, let's say a core customer were to walk away, then their growth rate would obviously be a lot lower and their downside would be a lot more significant. So I would, these are all things that you'd want to consider. And that's part of my value proposition to you, is giving you this framework to think about it. While Skillz is a special company, look, they're enabling the casual esports market, which is this huge wave that's just going to continue to roll on in the years ahead. Like, look, penciling out 90% growth this year means you're tapping into something that's special. People like to play against each other, enabling games to monetize this, which makes developers more incentivized to create games. They don't have to monetize their games in ways that are sort of counterproductive and that they take away from the game experience. This is a way that's additive to the game experience. So it's super interesting. They're tapping into this incredible trend. That said, I've called out some additional risks after reading the prospectus to my Journey subscribers that gave me pause. Look, this video is already going on 50 minutes, and look, this is not the super deep dive onto Skillz. I'm giving you a framework for the valuation. I already have a sheet. I already have the video on Skillz that gives you a broad understanding of their business model. But there were some risks that gave me pause as I read the prospectus. So ultimately, while I bought a reasonable size stake back in September, I did trim it down a bit, and I still own a tiny stake in Skillz. I feel the valuation is less compelling than it was when I first bought it at 12, which is kind of like, duh, you bought it at 12 and now it's at 18 or 20, depending on where it opens up after the ARK announcement. So I'm not super enthused about this. Maybe it keeps running because people are fear of missing out. You just got this FOMO and this crazy euphoria and people just want to buy into it. But I'd rather have a logical framework where I'm like, oh yeah, I definitely think this could have much bigger upside over time and sort of limited downside. And so for what I am buying, you do need to go to unrivaledinvesting.com, click on Journey. And interestingly enough, for January 2021, my potential multi-bagger, in my opinion, has something like 8x potential, in my opinion. And it wouldn't surprise me to see that eventually, potentially, in the months and quarters ahead, it wouldn't surprise me if ARK and their fintech ETF would consider buying it, because it is a fintech play and it's growing very quickly and a valuation that is much better than Skillz. But for that, you would need to go to unrivaledinvesting.com, click on Journey. And I also have a whole bunch of other things with Unrivaled Investing where I have exclusive content like educational content, how to think about portfolio optimization, like how much you want to bet, how to think about valuing stocks, how to find potential multi-baggers over time. I have a full catalog of the exclusive content. I'll put that link below in the description of this video, and just finding one potential multi-bagger can change your life journey. So if you're interested in following my journey to try to find these potential multi-baggers each month, looking at stocks, trying to find them, turning over rocks, trying to find some diamonds, go to unrivaledinvesting.com, click on Journey. And if you enjoyed this video, sort of announcing, diving into, ARK, sort of saying, hey, what's going on? What's going on with them buying Skillz? Does this represent an opportunity? If you enjoyed this logical framework of thinking about Skillz, make sure you subscribe, especially if you want to learn more about potential multi-baggers that I call out in the weeks and quarters ahead or years ahead. And thank you so much for watching.